Good morning and welcome everyone to the Money Control live stream. You're watching The Opening Bell and I'm your host Nikki Mishandani. Well, Indian equity markets are poised for a positive start coming in for the Indian equity market. SGX Nifty at this point of time is indicative of a mildly positive start coming in. After three consecutive sessions of gains, we've finally seen some amount of correction which crept into the markets. US stocks, they've jumped in higher, over 1% after the upbeat economic data. And if you talk about the macroeconomic data, that's the retail sales. They unexpectedly rose in May, and also another report which showed in jobless claims were flat for the week. Asian equities at this point of time, they're poised for the third weekly advances. Talk about the FII's data. They've been buyer for yet another session. FIIs have purchased shares to an extent of 3,085 odd crore. And if you talk about the DII's data, they've sold in shares around 297 odd crore. If we talk about the FNOQs, what we have in terms of long build-up, 39 stocks overall have seen long build-up to an extent of Apollo Hospital, and you have Zydus Life Science, Alchem Lab, and L&T Finance Holdings. If you talk about the long unwinding, there are 53 stocks which have seen long unwinding there. Oberoi Realty, Oracle Finance, these are some of the others that we have. In terms of the short build-ups, we have 63 stocks that are featured in there. Tata Chemicals, Dr. Lal, Wipro, Federal Bank and State Bank of India. If you talk about 34 stocks that have witnessed short covering, they include the likes of JK Cement, Godrej Property, Ipca Lab, Crompton Greaves. Talk about FNO ban and the stocks which have been included within that. You have L&T Finance Holding, which has been added, and Tata Chemicals. These are the two counters that we have. In overall, NSE has retained BHEL, Delta Corp, India Housing Finance, Indian Energy Exchange again has been retained, along with India Cements and Z within that same list. So that's that when it comes to the entire FNOQs. At this point of time, after a session of breather, we are probably, at this point of time, the global setup at least seems to be a little supportive. But to take the discussion forward and join us through taking us the fundamentals and the strategies and the charts thereby, we're being joined by Brijesh L, Head Technical and Derivatives at IDBI Capital, Market and Securities out there. Good morning there.
Yeah, morning, madam.
Right, I'm going to start off by asking you about what do you make out of the current trend? We saw a bit of breather coming in for the equity markets in previous session. Do you think it's a small pullback before the bull run continues, or you think there could be a directional change here on?
It's too early to comment whether we are going to see a change or something, but then I do believe that we are in an uptrend. The way the Nifty corrected yesterday, there was very slight marginal drop, but then Bank Nifty was something which we saw the decline. 44,000 was the level from where the Bank Nifty has seen resistance. So even though when there was a deep correction in yesterday, being a weekly expiry, the Nifty has never corrected the way Bank Nifty corrected. So the trend for the Nifty is still up. Maybe for the next couple of days, it can be in a range bound kind of a setup. But then in the near term, I do believe this all-time high level of 18,887 will be retested, or maybe closer to that should be the levels which I'm watching during the expiry month. So bias strongly remains positive. Today, maybe SGX Nifty is slightly positive, but then declines close to 18,600, 18,500 should be viewed as a buying opportunity is what I feel.
Sure. I'm also going to chat with you about Bank Nifty levels and the strategy you think market participants can take here on. Do you think a bit of underperformance by Bank Nifty at this point of time, or you think overall the trend remains bullish? Call or put, what's the strategy coming on that one?
So basically, if I do look at the Bank Nifty is now somewhere close to the support levels of the 43,500. So maybe during the day, whenever the Bank Nifty recovers above 43,500, I think there would be some opportunity to go long from the next expiry point of view. So the bias will be, we should trade one leg of positive from the current trade, because what I can see is the hourly chart for both the Nifty and Bank Nifty is in the oversold. So definitely there will be some amount of bounce. And even though this remains a lower range, 43,000 is the lower support rate for the Bank Nifty. So maybe during the day, whenever this 43,500 is taken out and we sustain about this, there will be one small trading opportunity to go along in the Bank Nifty.
Sure. Also, I would want to understand from you 3 profitable bets that you have for our viewers right now.
I would be looking to add some long positions in the. I do like Apollo Hospital in the current price. Yesterday already there was been some rally. I have declines close to 51.50 can be viewed as a very good buying opportunity. This remains a short-term pick. 5600 is what I'm looking on the Apollo Hospital. And then from the trading perspective, Godrej CP is something which is very positive. 1077 is a close. So I think one should trade. FMCG was also one of the sector when there was some spark in yesterday's trade. So Godrej CP is one stock which I think will perform. And near term 1100 plus 1120 is what I can see in Godrej CP. And beside this, one more stock I would like to add is Mahindra and Mahindra, which is trading at 1390 levels. So I think one can buy at the current trade itself. There is some amount of upside from the trading point of view. 1420 to 1440 is what I believe can be the upside target for the Mahindra and Mahindra.
Right, so that's the word coming in. Mahindra and Mahindra is also one of the bets, park with Apollo Hospital that British suggested this morning. But let's address stocks and news that we have right now. And in bulk of that, so start off just at the, starting off, we have IKIO Lighting. Now, this was the IPO which received maximum amount of subscription in the recent time. It's going to be debuting in on the exchanges today, that's June 16, and the maiden public issue was subscribed 66.30 times. That's the kind of demand that this particular IPO witnessed, and today it's going to be listing in there. QIB reserve portion was being booked at around 163 times. And if you talk about the high net worth individuals and the retail subscription, that was also oversubscribed. The issue right now is trading with a premium of 32% in the grey market. So at least it's 30% kind of premium is what we can look at least that's what is being quoted in the grey market. A bit of positive coming in for 2 pharma companies. Natco Pharma, which is received in the EIR for one of the facility at Andhra Pradesh, and EIR essentially stands for Establishment Inspection Report, which means that the inspection or the investigation now stands completed and concluded in the fullest form. And this has been received for its drug formulation manufacturing facility at Visakhapatnam, which is a great observation. I mean, there is no observation coming in on that one. It's a closure of investigation. So that's clearly a positive coming in on Natco Pharma. Torrent Pharma also has gotten an EIR for an oral oncology manufacturing facility. Now, this is at Gujarat, and the inspection, right now stands closed with this. Ramakrishna Forgings and Titagarh Wagons. These are the other 2 counters that you need to keep on your watch list. Both of them, they won an order worth around 12,226 odd crore. It's for the contract to manufacture and supply 15,40,000 forged wheels. This will be over the span of 20 years for Indian Railways. 40,000 forged wheels will be delivered during the first year itself. 60,000 wheels will be delivered in the second year, and 80,000 wheels will be delivered every subsequent year thereafter. That's as per the contract. And also we have brokerage notes, actually different stands coming in on Zensar Technologies, where one place you have MOSL, which has downgraded the counter to neutral and suggested a target price of around 390 due to the absence of near-term growth levers, which is expected to limit the upside growth. And also the exceptional margin run now is coming to an end. That's the word coming in on Zensar Technologies. And of course, we also have in Antique, which has raised the target price to 490 rupees, and the company has reiterated its mid-teens EBITDA margin guidance. That's the word. 2 different brokerage notes coming in for Zensar Technologies out there, but I'm going to go back to our technical guest and probably check with them at this point of time amidst the stocks and news that we have, which one looks attractive, and probably something like a Zensar Technologies also for that matter. Is that something that looks attractive?
If I do look at the technical point of view, Zensar was in an uptrend, so basically some momentum can be there, but then directionally, I don't think there will be much more of an upside. It can be more of a trading bet. I can see 420, 430 being coming in the near term. But having said this, anybody who takes a position should strictly maintain the stop loss of 375. declines below 375, there can be some ease of profit booking in the counters. So it's kind of a more of a trading bet. So having a position can hold till 420, 435 levels.
All right. Any other attractive bet that you think deserves a mention out there? Sure, FTSE rebalancing will take place today, along with some Sensex. Effective not today, but surely some adjustments are to be made on that level. Apart from that, anything within the banking space, probably HDFC Bank, of that matter, HDFC, or RIL for that matter, what do you think could be the next growth driver looking at the charts?
Reliance is one which is already contributing to those rallies. So Reliance is already up. So I think this continuation of trend will be there in Reliance. 2600 is what that can be the immediate upside from the expiry point of view. But having said this, Bank Nifty, the stocks like Axis and ICICI banks are seeing some amount of corrections. Little bit profit booking is there. So that is one of the reasons why we saw the correction in Bank Nifty in yesterday's session. So we do have a positive bias on the Axis Bank. So whenever the Axis Bank do come close to 960 level, I think that's an opportunity to go long in the Axis. Even ICICI Bank somewhere close to 911 is an opportunity to go long. There would be some decline in the banking. We need to wait and watch for the banking space. But then on the lower levels, definitely there would be some buying opportunities. So for the day specific, I think FMCG, where there was a spark yesterday. So from beside Godrej CP, ITC can be one counter which can see some amount of momentum. So ITC, we can bet for another 15-20 points from the current level, maybe from the expiry or maybe for the next 2 to 3 weeks kind of time frame. ITC is one part which I think one should be keeping a watch on it.
All right, so that's the word coming in from the FMCG basket as well. ITC seems to be a little attractive at this point of time. Apart from that, there's a bit of development which is coming for UTI AMC. Now, this is a money control exclusive that I'm talking about. Banks, LIC are expected to appoint in SBI Capital Market as the merchant banker for the stake sale in mutual fund. That's up for you to also read on moneycontrol.com. That's an exclusive. This process is expected to be completed in a span of next 3 to 6 odd months, according to the people aware of the development, which was suggested to Money Control. And earlier too, the process for the stake sale has already started, and they expected to complete it in a span of 3 to 6 months. So that's also the word coming in there. Keep an eye out on that one as well. Apart from that, there are a couple of other counters which have been doing well in trade. There is this rebalancing of FTSE along with Sensex, which is expected to take place today. We have also something in the likes of Tech Mahindra, where the company has appointed in Mohit Joshi as the managing director and the chief executive officer of the company. This is also one of the counters that you can keep on your list today. Apart from that, TVS Motor Company, the automaker, has sold in the entire stake of around 11.2 crore equity shares, or for that matter, 43.5% stake has been sold off in one of the, which was held in the associate company to TVS Holding, which is again a promoter group company. So it's pretty much an inter-sale transfer kind of an arrangement which is coming for TVS Motor. BHEL and Eicher Motors, these are the other one that we have on the list right now. BHEL and Volvo Eicher commercial vehicle, both of them have inked in an MOU to jointly develop and deploy in the Type 4 hydrogen cylinders, which is used essentially for commercial vehicle segment. That's another development coming in for BHEL and Eicher Motors. And of course, we've already spoken about Torrent Pharma and Natco Pharma. Pharmaceutical space, completely at this point of time, not much has been spoken about it, but it's in pocket, which as compared to IT remains to be a bit of attractive bet right now. If you talk about the valuation perspective, if you talk about from being into that entire defensive space right now, that's probably holding up as compared to IT, where there were foreign brokerage reports suggesting that every company is set to disappoint from the IT pack in the quarter to come by, or the quarter where they're supposed to report in the numbers. So that's clearly some amount of pessimism which is pretty evident entirely in the IT pack. But that's that. If you compare it with pharma, most of them are getting zero observations coming in from US FDA, EIR report being established from the from US FDA. So that's really a positive coming in for these companies. Let's address in the market open for you. Nifty 50, it's holding above that 18,700 mark with gains of around 0.1% out there. Bank Nifty, that also is holding up with gains of around 0.2%. And if you talk about the other mid-cap and the small-cap index that we have right now, just to see how the broader markets have been doing, mid-cap had scaled in a record high level in previous session. Actually, session after session, it's like a new high coming in for the mid-cap space. And today's session, there is no exception coming in. Gains to an extent of 0.3% coming in for the mid-cap counter and small-cap space too. We're seeing gains to an extent of 0.6%. So that's almost more than 0.5% gains coming in for small-cap, which at this point of time has been outperforming the mid-cap, of course, the larger counterparts. Talk about the IT index, where we spoke about how the pessimism has been painted across board for Nifty IT for most of the foreign brokerages. Well, 0.2% of losses coming in on that one. Metal index, the hopes that there's more stimulus coming in for China, which of course has an instrumental, a very pivotal role to play overall in the commodity cycle. That's doing well for Nifty Metal Index, which is shining bright right now in trade. Well, auto is in top gear right now, 0.25% coming in on that one. So clearly, momentum has been driven by the metal space, auto space, and pharma. Remember, Natco and Torrent were the two that we spoke about in early deals. And at this point of time, pharma has been holding up with gains of around 0.5% out there. FMCG basket too is doing well with gains of 0.3% coming in early deals. And in terms of other sectoral indices that we have on the chart right now, something like a realty index also is doing well. Consumption also remains to be seen for that matter. But let's address in the top gainers and the top losers that we have on the list right now. Apollo Hospital, JSW Steel, Tata Consumer Products, and Tata Steel, along with Tata Motors. So you have Tata twins there, Tata Steel and Tata Motors, JSW Steel. Of course, it's clearly a rally which is now seems to be driven by the metal index. DRL, Axis Bank, and Britannia. These are some of the other, other top gainers that we have overall on the list right now. Talk about the top losers that we have. Kotak Mahindra Bank, Coal India, and Wipro. These are the top losers that we have early this morning. TCS, Eicher Motors, and Bharti Airtel. These are the other losers that we have on the screen right now. But I'm going to go back to Brijesh and speak to him about what does he make out of the metal names right now. They've been doing well for the last 2-3 consecutive sessions. Talking the likes of JSW Steel, Tata Steel, or for that matter, something in the non-ferrous space, like Hindalco or Nalco for that matter. Hindalco, I'm sure there's a fundamental reason for most of the analysts to be bullish in, but talk about ferrous and steel, that's where, most of the momentum seems to be sentimental. But how is it playing out in charts?
So if I do look at the metal space, then I think there is some trade which can be looked out. For example, JSW Steel is one counter which is in uptrend, and I think there can be this continuation of the uptrend will be there. There's a positive bias in the counter. So JSW Steel can be one trading bet looking towards the 800 levels in the near term. Current price can be viewed as a buying opportunity. Maybe a max correction can be seen close to 770 or maybe 765, which can be viewed as a buying opportunity. Near-term view for the JSW remains at 800. Secondly, there's one counter which we are quite positive, Hindalco. So Hindalco is one stock which is at the verge of giving a trendline breakout. So any trade above 430 levels can trigger a short-term buy setup in the counter, and I won't be surprised if we see the Hindalco all the way going back to 445 levels. So these are the two setups which I do believe from the technical perspective can give some returns in the metal space.
All right, Brijesh, thank you so much for taking out the time and speaking to us. It was indeed a great pleasure having you with us on the show.
Sure. Thank you.
All right, let's address the fundamental story of how the metal has been playing out. Overall, the commodity space is a hot space right now. And to take us, joining us to take the discussion forward right now is Vivek Mashrani, CFA at Techno, the founder of TECHNOFUNDA Investing. Good morning there.
Hello, good morning. Great to have me in the show. Yeah, thank you so much.
It is indeed a pleasure having you with us. I'm going to start off by asking you about your assessment overall on the commodity space. Metal seems to be in top gear right now. For past couple of days, there is a good, probably hope stimulus emerging out of China, which seems to be buoying the sentiment for the metal stocks. Between the ferrous and the non-ferrous, A, what's your assessment overall on the metal space? And B, between the ferrous and the non-ferrous space, what do you like?
I think broadly, yes, demand is picking up greatly, as you rightly mentioned, due to China. And of course, even in US, the interest rates are not spiking, so we have commentary where interest rates are flat, and that is one more boost that, the cost of acquiring and the growth will come back again in the global economy. I think in terms of space, I would say ferrous is a most attractive space in my view. And probably, it would be worth to play even the proxy play, right? You have graphite electrode players like Graphite India and HEG. Some of the brokers also wrote a report on HEG yesterday, and I think that could be a good space to play this as a proxy as well.
HEG and Graphite India, the last time I was tracking it, I remember it's a very closed door industry,
Yes.
And it becomes very difficult to track what kind of electrode pricings are we sitting at, and how is that market stacking up, and how is the commodity pressure behaving. Sure, we can draw some parallels from the world electrode makers, but in Indian back home, do you see much of traction and potential building in between HEG and Graphite India?
Yes, absolutely. I think, if the players like JSW and a lot of Indian players are getting benefited, they will, of course, need, electrodes, and the demand of electrodes will pick up. But again, the play in this, as you rightly mentioned, it will be very volatile space. So what I do is, rather than focusing too much on the fundamental side, I rather play it through technicals, So I basically prefer going through the price volume action and then having my tight exits in terms of trailing exits, rather than, focusing too much on the numbers, because generally what happens is the numbers come slightly late, and by the time we take action, the stock has already fallen. So that way, it is very prudent to actually stick to technicals when it comes to the risk management part and the exit part. It is, of course, a short-term play. It could not be like a long-term bet for these kind of plays.
Fair enough. Sometimes, fundamentals charts do capture in what is inevitable to the markets after a while, at least when it comes on the financial statement. That's a fair call there. But what do you make out of the entire El Nino impact, on the FMCG space, on the auto basket, which has been doing well? FMCG has been holding up fairly well. Britannia crossed in the record milestone of 5,000 rupees yesterday. Sure, more than 50% of the analysts covering the counter right now, more than actually 70% of the analysts covering the counter right now suggest a 50% upside coming in on this one. What do you make out of it?
Yeah, I think absolutely. Whether it is El Nino or not, I think I am very bullish on the entire consumption space as well as consumption proxies, right? So anything related to real estate proxy, which is again like a consumption, like piping players or wiring players, super bullish on that. I think we have long runway, and there could be small, ups and downs that could be happening due to macro news. But structurally, it is a very, very, strong story for India as such.
But in specific, do you have any view coming in for FMCG basket? And within that, what are the preferable bets?
So rather than playing directly FMCG, what I do is I play most of the white goods and consumption side of proxy plays, right? So it could be your wiring plays like Polycab, KEI. It could be your piping players like Estral, Phenolux. Those kind of plays, I think, will give a double booster in terms of having still a reasonable valuation, that kind of compounding effect, and with formalization that is happening, they have a long runway where they are capturing the unorganized players' market share. And that, I think, it's a key, because if you see traditional FMCG players like Nestle and Dabur and all those players, somewhere, the valuations are too stretched in my view. So better to play, the other side of the story, which again is like very, very structurally strong mega trend that is going on.
So essentially, Vivek, from what I gather after speaking to you is you prefer a proxy strategy to the larger counterparts. So essentially,
Right.
you don't go with the frontliners. You would rather go with a mid cap or a small cap potential space. Have I got that right?
Absolutely. The reason is basically, everyone looks at the first order effect and who is direct beneficiary of it. And, most of the times these valuations get stretched when a lot of players are looking at it and there is demand on these companies. But sometimes, these hidden small and mid cap space players are not getting re-rated very soon. So you have that opportunity to get in that, and almost same compounding effect these players also give. And if you are able to find some very strong competitive advantage in some of these players, like we know that Astral is a very strong player in the space which it operates in, then the compounding effect can again, be very, very accelerating. So that is, yeah, you are absolutely right. That is the way I look at it, like more of a second order and third order effect of the entire mega trend that is playing out.
Since we are talking about the mid-cap and the small-cap space, which looks like an attractive proposition at this point of time, if we talk about the mid-cap space, it's been scaling record highs, or, there have been new highs which have been scaled day after day, yes, in the equity markets. At this point of time, to the viewers out there, to the market participants out there, what do you think the strategy that you will tell them to kind of trade into markets like this, which seem to be flirting around those record high after a session or breather out there? What's your assessment? And B, within the mid-cap space, what do you find attractive?
So I think definitely we should be in this space because what historically we have seen is generally small cap and mid cap trend, when it is picking up, it lasts for at least few months. And I think since May starting itself, we have seen that rally from mid cap and small cap space. So definitely this is the space to be in. Again, the strategy which I use is at an index level, I see technicals also in parallel. And in terms of picking the companies, I don't go too much down the quality curve, because we have seen 2017-18 and how these kind of players can get butchered, like in mid cap and small cap space. The kind of derating can actually, kill them also. So it is very important to be very selective, be with the quality names. And at the same time, when the trend is there, make most of it, because when we ride these kind of trends in very short period of time, it can give us phenomenal returns. In terms of radar, if you say one very prominent sector which is undergoing reset, all of us are aware about it, that is electrical vehicle space, right? So EV space undergoing reset. A lot of traditional players who had competitive advantage in this sector are getting displaced by new players, right? So say, for example, there are players emerging like JBM Auto. There are players like Olectra Greentech, which were nowhere there in the previous auto cycle when ICE engine were there. So I think it is very important to see that where this reset is going to benefit new players, particularly in the small and mid-cap space. And if this works out, I think they can phenomenally give good returns in the new future also. Another space, as I said, real estate proxy, again, mid-cap players there I'm tracking. And even core real estate players you can track, like DLF, and you have a lot of other players which are operating in this market, and proxy plays. The third sector, which is very, very important to track, is capital goods. I think the capex cycle is turning up, and since election is coming in next few months, there will be a lot of spending in terms of infra and machinery and everything. Capital goods requirement will only increase. So a lot of players like Apar Industry in the mid-cap space, AI Engineering, a lot of these players are getting benefited, and you have seen like phenomenal results coming up in these kind of players. So in mid-cap and small-cap, particularly if we are able to track some of these sector tailwinds, where not only the index movement of small and mid cap is helping them, but also the tailwinds and the earnings growth in that particular sector is helping them. I think that is a deadly combo to play. And again, being very, very selective is the key. Again, few of the players which I mentioned, I might have positions, and most of the players like Graphite, Apar, Olectra, JBM, I don't have the position right now. Another player which is emerging is like players like Dixon, which are beaten down and then again turning around. So we can even look at those kind of players in this market situation.
All right, Vivek, those were some nuggets that you've provided, a different strategy and the style in the way we are approaching markets, but we're completely running out of time. And, we'd like to leave it at that. And thank you so much for taking out the time and speaking to us. It was a pleasure chatting with you. Well, with this, it's a wrap and goodbye from the entire team who puts this piece together. Thank you so much for watching. And for rest of the update, stay tuned into moneycontrol.com and Money Control app.